Welcome to Charting Across the Board Traders, another session. On today's stream, we will present Type 1 and Type 2 returns using the harmonic framework on the macro as well as minor timeframes. Starting with Bitcoin as a proxy for risk on assets, let's revisit where we left off from our previous analysis. Jumping quickly here without wasting too much time, this is where we are on the price action for Bitcoin. During the last stream, we were at the levels 107, 108, nearing those levels before this major drawdown that took place to 98,000 region. We're looking for the shape of a W formation, a bearish structure. Also, at the same manner, we highlighted also two harmonic ratios, two major data points. The 0.786 within the lower trend line for this symmetrical pattern, as well as the 0.886 from highs to the lows. We got the 0.886, the fib retracement, as well as the from lows to the highs or valley to peak, the 0.786 for support. It was mentioned that if breaking either of these symmetrical structure, knowing that symmetrical patterns are known as neutral patterns, meaning they can break on either direction once they leave either of these trend lines. Since we break below the lower trend line, we then compute the measured move of the height of the wedge that was also previously mentioned, pretty much nearly close enough to the ideal turning point or the ideal measured move in this case. However, in the same manner, the reason why we highlighted these levels was due to breaking either of these data points will present a W or an M formation, where in this case certainly we encounter an M formation for a bullish butterfly that took place at the 98,000 region. Okay, arguably we can anchor the lower trend line at these levels as well as the previous one, but based on the congregation of ratios, this is where the majority of those data points converge. Therefore, a reactive move after printing a bullish butterfly, clearly a reactionary move as Type 1. Today, we'll navigate Type 1 and Type 2. But let's finish our analysis here on the 4-hour time frame, as we will move into other major time frames, giving the new data points that we have in the price action across the board on equities market as well as BTC. So therefore, where are we currently now? Once again, within the same formation that we were last week. Within now recapturing the lower trend line, remaining now inside the apex of this symmetrical formation. Therefore, prices again can still oscillate in between before potentially maybe retesting the higher trend line or the upper trend line as the supply zone. However, what I observe here in this segment of the move is that Bitcoin printed another W formation within this segment of the move. If we anchor those harmonic ratios, once again, we have the highs, back to the lows, back to the highs at the 0.886, a minimum retracement for B points, now testing the 0.886, an overspill, slightly overspill within this hourly time frame, okay? A very bad pattern, okay? Now, let's move back into the daily time frame, because so much, or as of now, there hasn't been any major changes in the price action on the daily time frame. Okay, there are patterns between the hourly, the 4-hour, but nothing meaningful for any major structural shift, at least for now. Okay, moving into the daily time frame, once again we are within the same W formation for now, my friends, okay? I will present also other variables that might be presenting on the current information, giving the new variables that we are observing the price action. Before jumping into the current information that might be developing, because there's certainly an argument for a flag, correct? We have the pole, and potentially now, maybe after recapturing the symmetrical formation, after playing out also, it's worth noting that this pattern was based on the 4-hour. It did perform, and now we are back again inside the symmetrical pattern, okay? However, new information. Are we going to bring, this is why the name of the title, which direction or what's next? We have the anchoring point in the upper trend line, as well as the lower trend line for support and resistance. Supply remains at 109, 110, okay? But arguably a flag, right? One of the conventional patterns for continuation structures, if market conditions are indeed extremely bullish. Okay, now we have intersection between price and time, my friends. Previously on June the 8th, we presented the intersection between price and time, as well as June 19th, and now the following remains for July the 6th. The next one after will be for the 1.618 on August the 3rd. What this means is that either this intersection or the axis, there is a higher chance for a price action to present a significant move. It doesn't necessarily mean it will be a major decline or a major upward traction or a reversal point. Rather, key date of significance. Okay? Now, starting on the type 1 and type 2 return, my friends, because I see many echo chambers calling for all-time high. You guys know this can be also the argument, is always the case, but let's revisit the same arguments, because where we are now might be different where we were previously. Or is this only another retest of those previous highs? To put it into the context and revisiting a very brief chart to the levels we are seeing now on the space, especially on the Twitter space or X, we are observing new all-time high colors, which, by the way, I don't have anything against them, but it's also important to bring context, okay? We're now in June. We're revisiting a chart from January, early this year, okay? The same 150 or 200,000 colors were presented at these highs. The reason I'm bringing this is now based on the timing, as well as the same projections that many potentially may be distracted or confused, giving the new information that I'm presenting now, comparing to where they were back in January, with similar projections by many others, calling especially all-time high on equities as well as Bitcoin. At the previous high, 109, just gonna observe here, there was a W formation, type 1. Type 1 is normally the first reactionary move of any harmonic structures. What are the type 2 returns? Type 2 returns are often a retest of the PRC. The PRC are the potential reversal zone where a shift in trend may occur. Here, in this case, we have the shark pattern, retest for type 1, where, giving the conditions back then, once again, this is new information, our projections were within the 70-74 region. From there, of course, an upward move. How high, we never know, because we are adapting to new information. Now that we have new information, the reason why I'm bringing this context, or this chart in context, is due to the same goals made back then, without disregarding or completely violating this 33% move in cryptocurrencies. On Bitcoin, altcoins suffer a slightly higher, some others between 50 and 40%. However, this is what matters now. If you guys give me 1 second, guys, I'm gonna do something in the background quick. Apologies. As always, some cough here and there. But let's revisit the current information on BTC, because this is where we are currently and what matters. You guys look left, market leave clues. If we redraw the same analysis back then, a W formation here on the left hand side, okay? W as well as an M, or a variation of an M in this case. And hear me out here, I'm only bringing these for major context on type 1 and type 2 returns. Here, previously a W, okay, for a shark. Let's put these into the same colors, only to bring the same context back then. This one was not as high. Here we go. Now, from a W to an M formation, I believe those were the arguments and the hard truth back then. However, new information were presented, therefore we're moving accordingly, okay? These levels were basically what we're observing here in this segment of the move, okay? If I anchor this one in blue to portrait or to present the same levels, trying to be as visual as possible here. This is a major move that many in the space also absorb, and why I'm bringing this where we are currently and what's next. Because we are going to continue to see many all-time high colors, but it's also important to know when these calls are made. The previous one at the beginning of the year was also made at these highs, correct? 107 and so on, even 102 to be permissive, to give them the argument or the benefit of the doubt. Major decline, 30% to 32%, okay? Since then, the expectation was indeed an upward traction. Now, how high was our fault or my fault, correct? Because I was expecting this move in the same manner. A decline from January the 21st to that B point at 74. We already mentioned this one before, but it's important to bring the chart giving the current information that we have today and also the sentiment that's being presented for BTC as well as the equities market. Once again, this one was only a projection from the 74 or somewhere in that vicinity for the 3-day chart on BTC. How high the C leg can always navigate to the 0.886 at 109, okay? And then of course it can mutate into a cipher if it goes higher to these levels where we are still in, okay? So therefore, the same, if you were, let's say, if an investor were or was invested expecting higher levels, you absorb a 30% decline. Unless you remain in, you're now the same levels, okay, within 6 months. Now, these levels, of course, does not matter. Now we have no information. How high can we go? Once again, if we look at the previous chart, there was an interpretation of an M formation. For the C leg is where we were looking how high can we go, okay? This one was also or only an interpretation based on an idea, okay? Technical proposition. So now, are we going to go much higher, okay? If we base the same arguments back then, because this one was the same interpretation. In fact, if I bring the same chart, I believe that chart is from Coinbase. You guys here, please bear with me, my friends, because today we have some key variables in the price action to present and to not get confused about how high Bitcoin will go, because the same echo chambers, same all-time high colors will be there all the time. Similar in a bear market, when prices are lower, the same pessimistic views are being presented at the lows. But we're trying to present unbiased perspective, giving the harmonic framework, okay? Here's a chart, okay? Once again, we revisit this chart over and over. Keep in mind the C leg was a reference point, okay? Somewhere around this line, okay? From the highs, from the A to the B, okay? Once again, A to the B, we're here. The point here is that the sentiment, once again, all-time high colors were presented here. Now, the narrative changes when we have new information, okay? It's very key. Why? Because you are going to, of course, completely violate your goal at the highs absorbing a 32% decline, and now revisiting the same levels we were previously in January. We are basically at the same levels, unchanged levels, basically on Bitcoin as well as the equities market, the S&P, where we're close to retest the previous all-time high. Therefore, where are we currently retesting? The same levels we were back in December of last year. Last year, in December, we tested the 6166 on the S&P, and on Bitcoin also we retested right here. You guys can observe 108. 108, there was a bearish butterfly back then, which is a first reactionary move. A decline occurred. Time to return, a true reversal point that strengthened the argument for a deeper decline. Okay, that was indeed the case. From there on, of course, new variables. What was presented here, and information. Okay, this one. There were support levels were indeed found between a 76,000 region and 71. 71,000 never came, but the range between 76 and 71 did appear at 74 in this case. However, those were the levels for the projected zones we had in our room without making all-time high calls at these highs. I'm trying to be as objective as possible, okay? Now that we have new information, has anything really changed from our projection? We did know that a decline could occur at the B point and then a bounce. How high is where we are? We do not know, okay? I do not know. I personally never know what's going to happen next, okay? So now that we are here, we do know that this C leg can always range at the 0.886, 105, and if it goes higher than the 0.886, we then have the argument for a cipher at the 1.13, the 1.72, or the 1.41, okay? If it goes any higher at the 1.618, of course, that becomes a shark, a different pattern, but we're moving accordingly, giving the new information that is presented in the price action, okay? All right, this is where we are on BTC, only to present the arguments that we are basically at the same levels we were back in December of last year, okay? This is why the argument, the sentiment hasn't changed. The same all-time high colors will be here, the same lower levels will be here, but our approach is to present the arguments objectively, okay? It has been throughout the years, so we're trying to present unbiased perspective to approach the market objectively. Once again, looking at the daily time frame, there is nothing really new on BTC. However, if we gauge new information, the only variable, if this is indeed a true continuation of a bullish trend, might be the bull flag, okay? That is the only argument I can observe here. Indeed, if this is going to navigate higher, if we bring the measure move of the structure. Now, to bring this is why I brought the context, the full context, because the new or the same colors for all-time high colors at 130, 140, and so on were the same that were presented here. So their projection was these levels, but rather we have the opposite towards the downside, okay? That did not occur. Wrong interpretation, my friends, okay? Now, of course, we're not going to have a 100% accuracy in our interpretation. My interpretation will never be 100% accurate, as never can be, okay? But we're trying to present objective arguments to present that so far within the macro, nothing has really changed, especially if you consider the same levels we were back in December. 1010, despite the overthrown at 112, okay? Why? Because we're coming from a major bull run. We already presented these arguments before, so therefore I'm not going to navigate those data points once again. If you want to listen or hear about the beginning of the true bull run that was presented here, you guys can revisit our previous stream. Now, to me, we are entering a cautionary levels in my interpretation, my personal interpretation, okay? So therefore, I'm not trying to present my bearish arguments, neither any strong sentiment to either direction. My interpretation remains the same. Why I'm starting with Bitcoin? Because now I would like to go into the S&P 500. So far on the S&P, there is no major change, or I'm sorry, on the price action for Bitcoin, there's no major changes, at least for now. So therefore, I'm going to go into the price action for the S&P 500, where we may have more arguments for the overall macro interpretation. Okay? Knowing that Bitcoin is often perceived as a proxy for risk-on assets. Okay? Is there any signal on BTC suggesting that we may go to 300,000? So far, not, my friends, but we're being objective, knowing that the only argument that I can perceive is a flag, okay, from here. But once again, the same arguments by those all-time high callers was the same, but rather the price did the opposite. So very important to understand the interpretation of market participants, which, by the way, in order to understand who are the market participants, correct? Retail investors, institutions, would like to be here, or would like to present here who those participants are. We'll bring the next chart. In order to understand who those speculators are, market participants, retail trading, or retail traders are often individual traders, ourselves, okay? Why retail trading? Because we are trading our own capital, right? We do not manage large capital as the institutions do, okay? The next one in line are proprietary trading firms. Some of them are Trillium. Other firms also can be perceived as a new one, even though they've been in the market for 15 years now. Topstep, as I mentioned before, is a futures proprietary funding firm, meaning they're using their capital to fund traders. Following the next line, we have portfolio managers, institutions, hedge funds, as well as market makers. So therefore, we are in the same line, the first line within this role, individual trading. Now, it is being said that retail trading has been outperforming the institutions. It is really true. I'd like to bring here another chart, my friends, from Jurien Timmer, who is the director of Global Macro Fidelity Investment. Okay, this is where it gets very interesting. Now, if we go into another chart, this is an insider trading, selling, or buying and selling activity from insiders. Okay, and who are the insiders? Insiders are often officers or directors on any company, or also major shareholders. So therefore, what we can observe here, based on this Vickers chart, which is a financial data provider specializing in insider trading activity, therefore, is really the retail trading outperforming the large institution or insider trading activity. We can observe that here at the last decline, within 23%, there was indeed insider buying. There wasn't only retail that was piling into those lows from April, okay? And of course, you guys can look left. We can observe all the previous years also where insider trading activity occurred. Now, moving into the next chart for the next reading, I would like to present also where we are in the price action for the S&P 500. In a similar context as Bitcoin, you guys can observe that we are basically at the same levels we were, or within the same range we were back in December of 2024, even though we are within 108, 112. That is a very minuscule range, but the same overall on the macro range. Okay? Pretty much the same range. At the highest levels, the upper trend line. Now, moving into the price action for the S&P, similar context here. We're retesting overhead resistance from previous highs. This is a new contract on the S&P 500 futures. Therefore, we are now testing there's a W formation, okay? We can observe here a W formation retesting or going slightly higher than the 0.886 at 61.23, okay? Now, as you guys know, type 1 and type 2 returns are two variables within the harmonic framework. Type 1 is ideally the first reactive move, correct? So far, we haven't seen any major reactive move that often navigates, okay, towards the 0.382 as a minimum target on type 1s. Assuming this W formation performs, the correction on type 1 should ideally test the 0.382 as well as the 0.50 or the 0.618 before another resumption of the upward trajectory, assuming the trend will be upward still, okay? Type 2 return often is another retest, assuming the price retraces back here to the 0.382, the 50%, or the 0.618 retests the highs before a true reversal point. This is based on the minor time frames comparing to the weekly. This is based on the daily time frame. Now, before jumping into a weekly time frame, let me bring this chart, the next one, which is a very interesting one. Okay, now we see the anatomy of the 20% drawdown. The same chart the same chart is from, once again, Juriem Timmer, Director of Global Macro at Fidelity Investment. Keep in mind that none of the arguments presented here are financial advice, only a disclaimer. Going back into the chart, the anatomy of a 20% drawdown, what happened when the price action recovers a 20% drawdown, or what occurred previously during those V-shaped recoveries? In the chart, you guys can observe that we are currently at the black line, the curve line in black. We were 2% below the previous all-time high on the on the S&P 500, on the cash market, on the spot market. There might be some differences between price on the futures market. However, these represent the data points on the spot market, okay? So therefore, throughout the years, the lines or the curve line that were navigating higher was from 1998, where after recapturing the previous all-time high, prices continue to navigate higher between 5%, 10%, or 15% as observed in the chart above, okay? This is the only time prices were, or similar to 2020 also, before presenting a wrong information here, 1998 and 2020 were presented similar price behavior after breaking above the previous all-time high, okay? All the other years in history, prices either navigated lower. In 2015, as you guys can observe in light blue, prices retraces back to 10 to 15%. The orange one from 1968 presented a decline of negative 55%. All the other ones were only sideways move for the end of the year. So what's next? Where do we go from here? Do we really go to an all-time high as 1998 and 2020 after recapturing the previous all-time high from those previous highs, or we move sideways? Now, given this information, I would like to jump into the weekly time frame. You guys are already familiar with the major patterns that I presented back in 2022. To me, nothing changed on the macro, at least for now, and I will bring back the anatomy or the case here for type 1 and type 2 returns on the macro, okay? Therefore, going back into our major time frame, the macro, which is based on the weekly time frame, where is the S&P 500 heading? Are we going to present the 1998 case, bring another high, 20%? Reason why I'm bringing this chart is also because the same arguments for all-time high colors back in last year was at December, prior to the absorption, right, of this 20%, 22% decline. Now the same echo chambers, the same all-time high colors are presented here, but nothing really changed on the macro, in my opinion. So therefore, unless new information is presented in the price action, I'm going to, of course, approach the market objectively. And this is based on my major projection back in 2022. And here comes type 1 and type 2 return. The major projection I had back in 2022 here, you guys can observe in the chart, was the lows, giving all other major readings also in momentum indicators. The MACD was suggesting, or the RSI was suggesting undervalue conditions presenting divergence, hidden bullish divergence back then at the late 2022, early 2023. Therefore, my projection was we may likely retest those highs at 61, 62 to overspill levels at 63.55. Where are we today in the price action on the S&P at those same levels? Correct. If we go into the previous contract here on the S&P futures, not the current one, but the previous information, 61.66 was the highs. Projection made in 2022, my friends, 61.62. Okay, 4 points difference. And the major one, or the overspill of this W formation, or the ABCD structure in this case, is a reciprocal move from the legs A to B, C, and D. The equal or the proportional move from that wave of the length. Okay, so therefore, we are at the same levels pretty much since 2022. Not at the same levels, because this one was my personal projection. At the time, my projection was that yes, the bull market might be here prior to reaching 2025 and 2026. To my personal interpretation, were the periods of risk. Those periods of risk are being presented given the current geopolitical tensions. Okay. So now, I not only presented my levels to those highs, because if we once again recreate the same chart, I would like to present the type 1 and type 2 returns. Are we now observing a price behavior that can be perceived as the type 2 return? Or we're indeed printing a new all-time highs, or much higher in this case, because from here on, even if we go slightly higher to 6,500 per se, okay, it does not change much. It can be perceived as an overspill of this major ABCD structure. Okay, that was indeed the projection I had back in 2022. Okay, 2022. Now, what occurred from there, my interpretation was that depending on the new information that occurs here, once we achieve these levels, where we have indeed, there was indeed what occurred last year. We printed all-time high, and then was I personally making calls to new all-time high to 7,000 or 10,000 points on the S&P? No, my projections were that a potential decline was indeed due for a correction after a significant upward traction bull market. We printed a 22% decline, certainly. So therefore, this reactionary move, applying this reaction on the macro, can be perceived certainly as a type 1, I'm sorry, not type 3 here, type 1, which is the first reactive move of a major ABCD structure, presenting indeed a very significant reactive move that mentioning that the type 1 can always navigate from the lows to the highs in this case, minimum to the 0.382, the 0.50, and the 0.618. Where did we go at the 50% correction? Was this also within the cards? Correct, my friends. That was certainly within the realm of probabilities in the price action right here. Okay, this one was from January 10th of 2025, where the correction I was projecting was within the common areas of retracement the 0.382, the 0.50, and the 0.618, okay, within the range. The 50% correction is often the Dow theory, where the price action often corrects a 50% decline and then resumes the upward trend. Therefore, there can be an argument for higher levels, but nothing changed in my particular interpretation since 2022. Correct from the lows, 4,000, 3,500. That was the projection from that lows, or from those lows to these current highs. Retested, the correction occurred, okay? Here, if we go back into this is a monthly time frame, therefore this is a macro structural formation. So certainly, are we going to observe now a type 2 return, which is another retest of the previous highs that was within the harmonic framework? So in my personal opinion, once again, nothing has changed since last year, my friends. All the declines that we perceive was within the realm of probabilities of the 0.382 and the 0.50 based on the macro time frame. So therefore, are we going to observe now a type 2 return, which is either slightly higher than the previous high before a major decline? My friends, I do not know. However, what I presented back then is that if we achieve these levels, I then also projected what can occur afterwards, which, as you guys already are familiar, or some of you are familiar, was the following chart. This one, the same chart from 2022. Not only one step, but two steps ahead. This doesn't mean it will be the case, okay? Only a reference point that once achieving these levels here at the highs, my approach will be from a cautionary level, understanding the macro harmonic ratios, okay? Why? Because these levels are repeating forces that occur or have occurred on the price action for Bitcoin among many other asset classes, okay? So now, in my opinion, we are here from that projection from the lows, once again, 2022 to the highs. Can we go to 63,555 or 6,500? To me, there is not much of a change if that were to be the case, because the same interpretation I had before is the same. From the lows to the highs on the macro, now from here on, the periods of risk. So in my opinion, I'm approaching objectively trading also, reason why I'm starting to trade the minor time frames on the hourly time frame, as well as the 15-minute time frame. Okay, so now where are we here? Was this also new to me or to anyone who understands how price action behaves? Absolutely not, my friends. On the price action for Bitcoin, where we left also on the previous stream was, I was computing a pending information, as you can observe here, a bullish butterfly, also similar to what Bitcoin recently printed on the 4-hour. Now, I rather now trade the minor time frames rather than making another larger projection, such as the previous one from 2022. I already made my projections, my long-term projections back in 2022 at the market lows. I'm not making new projections at these market highs, my friends, until new information presents itself, okay? But to me, nothing changed from my personal projection back in 2022. Now we're testing those levels. We tested the highs. What occurred? A reaction on the macro to 4,800. Retesting, bouncing back. Therefore, I do know that this can be a type 2 return. And instead of making new projections to 10,000 or 8,000, which by the way, those same colors were projecting lower levels, just to be fair, okay? Now, of course, it's easier to make projections when price action is trading at higher levels, which is often the case. Price or traders tend to make new projections to higher levels at the highs, as well as lower levels at the lows. Anyways, now the S&P 500 is currently trading at the PRC, also a range within a W formation. If I go into the current contract here, on the September contract, This is the price action I was looking on the hourly time frame, okay? Here another example of type 1 and type 2 return. Previously, I was looking at the M formation or a pending M formation at the C to the D, potentially for a trade, okay? From the C to the D, what occurred? Indeed, C to the D, we tested the 1 to 72. What occurred? Prices bounce from those levels. This is known as type 1, the first reactive move. Type 1, reactive move. Prices often navigate towards the 0.618 and in some cases towards the 0.886 before retracing back and retesting either the same PRC, the previous low, or the complementary ratios for this particular M formation that was within the 172 and the 1.41, also highlighted here. 172 and the 1.41. The first one that came was the 1.272, where prices retest at the first reactive move. The first reaction, certainly a major upward move. Therefore, I rather now trade these minor time frames to take opportunities or take advantage on the opportunities that the market is presented to me rather than making new goals. Because so far, I done my work already or my research 2 years ago, nearly 3 now as we're heading into December 2025. Okay. So now from this new information, what I observed also after testing the lows at the 59.56 was new information, my friends. What can we observe here? We connect new information. This is what we normally do. We apply new readings within the price action because none of this existed before. Therefore, it will be pointless for me to make new projections, correct? But trying to predict every single move within the market. Here, a B point from the highs to the lows, back to the highs at the 0.886. I normally know that this often goes to where? To the 1.618, okay? As we normally know, in hindsight, many can predict or can pretend to know that what can occur next. However, once again, another data information, this one on the 15-minute time frame, which is also a case study I was working on behind the scene, okay, from that type 2 return, the A, another retest, and the projection, if indeed that information was going to present higher levels, the same conditions goes to the 1.618, 6140, or the 1.90, 6162, which are indeed the same levels we're observing now. Okay, and all of this makes sense. Now the 1.618 was certainly tested. First reactive move, only a reaction, not necessarily type 1. Why not necessarily type 1? Because type 1 should present a minimum retracement from the lows to the highs, minimum retracement once again to the 0.382. We did not have that here on the 15-minute time frame. However, the levels I present here, these ones, okay, once again, knowing that the major macro formation is within potentially a type 2 return, okay, I do know that on the daily also, the main bad pattern are also within a level of potential turning points. So my approach here comes from a cautionary levels. Should I go long here at these highs blindly, knowing that we are retesting previous high overhead resistance? Not necessarily, my friends. That's not my approach. Once again, if we bring the chart from the one that I presented before, from Juriam Timmer, looking here in the background, if we go into that anatomy of the 20%, because this is where we are now, where do we go from here? Do we go higher, 5%, 10%, 15%, 20%, as it was the case for 1998 or 2020 after COVID crash? Or we go into 2015 or 2011 or the orange one from 1968? You, my friends, can always flip a coin and make your projections to either direction, okay? We now know that not necessarily only the retail trading space was, or the retail traders were with the buying the dip mentality, but was helping that push was also the insider trading activity that was indeed presented an opportunity at the lows. But again, that is a new opportunity comparing to other investors per se who were already in the market at the previous high, where the market pretty much did nothing from that previous high. Okay, so therefore, until new information presents itself, until new price discovery is presented, we then can make different projections. Okay, why? Because price is discovered through a bidding and an offering. How much are buyers willing to pay, or how much are sellers willing to take? So therefore, we are once again at a key inflection point where, heading into the next year or the end of the year, we will have new information and we will see if we indeed go to much higher levels. And what I mean by much higher levels is those crazy projections to 10,000, 8,000. 7,000 doesn't seem much of a difference, but why not making those same projections at the market lows from 2022 rather than making those exaggerated projections on market highs? My friends, please remember to approach the markets objectively and live a life with an attitude of gratitude. I'll see you guys on the next one. I know this may be a nothing burger, but only to present the sentiment. Nothing has changed so far. We're at an inflection point that anything can change from these levels. Okay? I made my personal projections, so therefore I'm going to stick to them until something changes on the macro. The macro didn't change much. Everyone, thank you for being here. I'll see you on the next one. If you have any question, remember to tag me on Discord or join us if you have any questions. I'll see you guys on the next one. Cheers.